Hi everyone, welcome back to my channel. I'm Shakila LeBlanc, aka the Loan Slayer, and today we're going to talk about home equity. If you purchased your home around 2020, 2021, or before, you probably are sitting on a lot of equity in your home, especially because for a few years the housing market was growing unusually fast. I always get questions about accessing that equity. So today I'm going to go over a few options and share how you can leverage the equity in your home. So first, I want you to have a clear understanding of what home equity is. Home equity is the difference between the current value of your home and what you still owe on your mortgage. For example, if today your home is worth $300,000 and you only owe the bank $150,000, then you have $150,000 in equity. Now you can access your equity a number of ways and they each have their pros and cons. So let's dive into the first option, which is a HELOC or home equity line of credit. You can think of a HELOC like a credit card, but with your home's equity as the credit limit. You can borrow money as needed, pay it back, and borrow again, all within a set time frame. Some things to consider when getting a HELOC is that you're only paying interest and not on the actual balance of the HELOC. The interest rates are variable and are a little bit higher than the normal fixed home loan rate. Depending on how your HELOC is structured, you may not begin making fixed interest payments on that balance until sometime after 10 years. The good thing about HELOCs is the flexibility. So you're only going to pay interest on what you actually use. If you are approved for $100,000 for a HELOC, but you only need right now $20,000, you can draw that smaller 20K amount to do what you need to do. And that's what you're going to pay interest on, only on the amount that you draw. Now, another option would be a home equity loan, also known as a HELOAN. The home equity loan gives you a lump sum of money up front and you pay it back in fixed monthly payments over a set period of time. So this option is good if you know exactly how much money you need and you want to have predictable monthly payments. The last option we have will be a cash out refinance. This one's a little bit different because it replaces your current mortgage with a new, larger one. You're essentially refinancing your mortgage and taking some of the equity out as cash. You'll have a new mortgage, possibly at a different interest rate, and your monthly payment changes. Now, with all of these options, you basically have to decide what is right for you. And that depends on your personal goals. What I recommend is comparing them side by side to see how much interest you're going to pay, what the monthly payment will be, and of course, what the terms of the loans are for each option. If you want flexibility, a HELOC might be the best option for you. If you know exactly how much you need and want predictable payments, then a home equity loan could probably be the way to go. And if you're looking to refinance and take advantage of lower interest rates, then the cash out refinance option could be your best choice. Any of these options could work depending on your situation as long as you have clear goals and a plan. I do not recommend you taking out a loan, especially one that comes with a lien against your home for something like a vacation. But here are some reasons and ways you can use your equity. Number one, debt consolidation. This is one of the most common reasons people tap into their home equity. It's to consolidate high interest debt. Because by paying off credit cards or personal loans with the equity, you could potentially lower your monthly payments and save money on interest. Another great way is home improvement. So if you want to remodel your kitchen, add a bathroom, finish maybe a basement, These are all good ways to use your equity because it's potentially going to increase your home value, which means you'll have even more home equity in the long run. Some people use their home equity to invest in another property or invest in a business. This can be a good thing to diversify your investments. But with this option, you have to understand the risk and rewards. You can't just be like, taking out this money and, this venture is going to be successful. So make sure you consider the risk. And lastly, emergencies. So if you had a medical emergency, lost a job, this is a great way to take care of some of those unexpected life emergencies. So there you have it. I've shared 3 ways to access the equity in your home and how you can leverage that equity to help you out in different situations. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more tips and insights on home ownership and mortgages. And hey, if you have any questions or want to explore your options, don't hesitate to reach out. I'm here to help you every step of the way. So thanks for watching, and I'll see you in the next video.